Hello folks, so SoFi just keeps going up. However, by any traditional metric, it is highly overvalued. So what gives? Why does the stock just keep going up? In this video, I'll answer that and more. And stick around to the end because I'll give you my expectations of what the stock may do after the company releases earnings on Monday morning before the market open. But before we begin, this is not financial advice and it's for entertainment purposes only. So what makes SoFi so special is that it's sort of like a traditional lender, but it's got a whole lot more going for it. SoFi's three biggest strengths are fast growth, diversified revenue streams, and it operates in a niche market. So let's talk about the first point, fast growth. As you can see on the slide, revenue has been steadily growing for several years now, and it just jumped last quarter to nearly $700 million, a record for the company. Adjusted EBITDA has also gone up in tandem, which is good to see, but even more importantly is that SoFi is now GAAP profitable. Yes, in the last quarter it made $214 million in net profit. So SoFi is growing both its revenue and earnings, which is exactly what I look for in a momentum stock. And to further emphasize SoFi's growth potential, user growth went up 35% year over year last quarter to 9.4 million customers. To be honest, that is quite a low number considering the big banks like Bank of America have more than 60 million customers, so SoFi still has room to grow in terms of customer acquisition. The company is more than just a lender. As you can see on this chart, the proportion of revenue coming from financial services and technology platform revenue are about to surpass that of all other adjusted net revenue. These segments grew by 64% year over year in Q3 2024, emphasizing SoFi's shift towards higher margin, capital light revenue streams. Looking at their lending business, which is still a core part of the company, it still grew over 19% year over year, and Anthony Noto, the CEO, in this Bloomberg interview said that a declining rate environment like we're in right now will be a strong tailwind for lending going forward.
Talk to us about the macro, because you're saying to investors you feel really good about the current environment, that headwinds have dissipated. Anything that worries you? I mean, we're all still bracing for an election, and that feels like quite a lot of lack of transparency.
Yeah, I do think there's still a degree of uncertainty out there, but I think the trends are clear that we're going into a declining rate environment versus an increasing rate environment. And in a declining rate environment, we have several businesses that will benefit meaningfully. Our home loans business will benefit from more refinancing. Our student loan refinancing business will allow people to refinance their student loans at a lower rate in a lower rate environment. And so those businesses will have a tailwind for sure. In addition to that, as rates come down, the rates that other competitive banks are offering their members or their clients will also come down. And we will be able to maintain a superior rate compared to them because we also own the lending origination platform.
Now, one area that is really interesting is SoFi's investing platform. It's a fully fledged brokerage platform where you can trade ETFs, stocks, options, and even crypto. This is an exciting sector to be in right now, and in case you haven't noticed, we are in a tremendous bull market. And of course, stockbrokers do very well when the stock market rises. So think of SoFi as being like a stockbroker like Robinhood, but with a whole bunch of added financial services to make it a more diversified company. SoFi is also expanding into the credit card business with the launch of everyday cash rewards and essential credit cards. Many Wall Street banks are trading at 52-week highs, and whilst SoFi is not a direct competitor to many of them, due to its niche customer pool, it's still important for stocks to be part of strong sectors. And there's one more reason why I like SoFi. It's in the financial sector, which is very strong at the moment. In fact, Tom Lee expects financials like SoFi to be one of the best performing sectors for 2025. Have a listen.
But here's, I think, an important chart for financials. This is stocks from 1933, and this blue line measures financials relative to the broader stock index. And you could see historically it was very cyclical. And then in 2008, the financial crisis happened. Now, after the financial crisis in 2008, the Obama administration took very punitive actions against the banks. And as you can see, banks struggled here since 2008. And then COVID happened and banks collapsed. So banks here are now below a level where they normally start to outperform the market. And again, we now have a White House that is pro-deregulation wants to have the stock market do well, all of those require the financial industry to perform. So I think that this is the start of a period of outperformance of financials, and that's why it's our number one pick.
Now let's take a look at SoFi's chart. After getting crushed in the 2022 bear market, SoFi took more than 2.5 years to bottom out. It has since more than doubled in the last 6 months and just recently broke out of a prior local high, circled here. If we zoom back out, we see that the stock is now trading in the zone it used to trade at after its IPO. I'm not sure what sort of resistance it may face going forward, but I wouldn't be surprised if we get a slight retracement in the coming weeks. Of course, if we get a positive earnings report on Monday morning, the stock could skyrocket, so basically anything can happen. Anyway, let's talk about the earnings. What is the market expecting from SoFi on Monday morning? Well, here we can see it's expecting an EPS of 4 cents per share and revenue of $682.2 million for the fourth quarter. Remember, in the last earnings release, the company upgraded its full year guidance, so expectations for this quarter are really high. If we do get stellar earnings on Monday morning, we can expect to see a continuation of the current rally and possibly even a sharp gap up at market open. Even if the market doesn't like the result and the stock gaps down, it's likely to still be in a solid long-term uptrend, so investors need to keep that in mind. Anyway, that's it for this video. Do you own SoFi? If so, let me know in the comments below. And if you haven't already, consider joining the Momentum Investing community where we discuss stocks like SoFi. And don't forget to like and subscribe to get more videos like this. Thanks for watching and see you next time.